Welcome back. Mark Bertoli joining us from Abbott Wealth Management on this Wednesday afternoon. Welcome back to the show.
Merry Christmas.
Yes, and to you. We thought we'd take this opportunity to talk a little bit about the year of our economy, both in Canada and in the States, and how things have gone over the last 12 months.
Right. It was looking really good for Canada until about 3 months ago when things started to change in the oil and the resource sector. And so year to date in Canada, we're up about 1.76% as of yesterday. And I think the S&P 500 in the US, about 6.75%. So very interesting. If we took the last 3 months out of the game, we would have been double digit in Canada. You know, and we still have a few days left. And when you get reactions like that, typically you're going to find that there's a reaction in the other direction, as we're seeing today already. So, yeah, there's lots of things going on.
Didn't gold take a bit of a tumble as well?
Yeah, well, it's interesting. The mining and energy sectors in Canada were hit pretty hard this year. Consumer discretionaries and technology did quite well. So it depends where you were, you know, and the banks, of course, just plugged along and made their profit like they always do. And so it depends where you were and within Canada. But very important about that, and you know, the S&P and the Canadian markets, Canada really is only 3% of the global economy. And we have a bias to be in Canada. We always want to be home. And people feel comfortable owning something. You talked about owning Tim Hortons. People love to own Tim Hortons. It's now American, but people have a bias to that. So we have to be very careful that we're not just in Canada. Mining, energy, resource, and banking, a lot of the Canadian market. So, you know, it is important. Through the mess of 2008 and the crisis in the US, it was a great place to be. But the US economy is still the largest economy in the world. A few years back, looking at the US economy, the number 2 consumer of the world was the US female. That's how big the US economy is. So,
wow.
So you know, it's don't be too stuck to home. We have to look. Low energy prices, as we talked a couple weeks ago, are a real boom for the average consumer in the U.S. economy. People have more money in their pockets to spend and more manufacturing. You're going to see, I looked at the last 10 years of consumer spending. 2005 was a high. 2008, when the recession hit, just about fell in half, and we're at about 90% of our high annual spending. I think about $850 in the household in the U.S. right now.
Okay.
So
the last 3 months have been the weakest of the 12.
They have, yeah, for sure.
Do you think that 2015 will start off with that lagging still?
Well, as we said before, and you know, a lot of this is to do with energy. When you spur the economy, because energy isn't at such a big cost, up goes manufacturing, up goes construction, and the demand for energy. So who knows?
Let's take a look at this graph that you sent along to me today. There it is. There's 2 of them.
Yeah, it actually, the one in the front is the Canadian market, and the one in the back is on the top left is the U.S. And you can see the last 3 months what's happened here in Canada when the resources and energy stocks have been hit.
And we're really affected by what's going on to the south of us as well. Like, that's always been the case.
Absolutely, yeah. And you know, a good economy in the U.S., which things are looking pretty good for the U.S. consumer next year, will also, of course, we're their #1 trade partner, will help us in Canada as well.
Yeah, so the ripple effect is there. So we have to be optimistic about the start to 2015 then, Mark.
I'm always optimistic.
You have to be, and I enjoy your enthusiasm. That's good. We do have a question of the week that we'd like to put on the screen now. Here it is. I hear a lot of financial news. What should I listen to, and what is applicable to me?
This is a great question. People get concerned, and I guess I can answer this with a conversation I had about 3 years ago with a couple. We were talking about CN Rail, and they were very concerned about what was going on in in Greece. And I was just joking with them, but I said, you know, I phoned the president of CN Rail. I asked him, they're not building a railway to Greece. So I guess the moral of the story here is know what you own. The other thing is you need to be disciplined. Warren Buffett said to have strong discipline and not let emotion erode that discipline. So know what you own, know your investment strategy, and also you have to ask the question, does that advice apply to me? So there's a lot of people out there saying, I'm buying, I'm getting out of the market. They may be talking that they're getting out of the market today and they're going to rebuy again on Monday or Tuesday morning. And for the average investor who is a long-term investor, that is absolutely irrelevant to what they are doing. So be very careful. I guess the other thing about that is get advice. The biggest threat to a person's portfolio and their investments is emotion. And sometimes you need a coach.
Yes, excellent. Good advice today. Mark, thank you very much for being here.
Thank you.
All right, information is on the screen right there. AbbottWealth.com as well. info@abbottwealth.com if you would like to have a question answered. We are back in 2 minutes with MP Kathy McLeod. Stay with us.